Hello investors and future investors, welcome to the channel. In today's video I will show you how I make $600 weekly using the PMCC. So if you're new to the channel, thanks for stopping by. On this channel we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button, and while you're down there, consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So for today's video, I'm going to show you how I generate $600 weekly using an option strategy known as the PMCC. Now, the PMCC is a combination of two other option strategy, which is leaps option and covered calls. Now, the leaps option is a long-term equity anticipation securities, and a covered call is going to be selling calls against the leaps option. Now, if you're not familiar with covered calls or leaps option, I will leave some videos to the top for your reference. So leaps are by far my favorite strategy for building my portfolio so quickly. So for today's video, I will show you the leaps that I own and the returns I'm getting weekly. So the first stock we're going to get in today is going to be DraftKings, ticker DKNG. Okay, so here we are on DraftKings, and as usual, we're going to jump into the DraftKings options in order for us to load the DraftKings option chain. Now, once we get to the DraftKings option chain, the first part of the strategy is to purchase the leaps. Now, in order for you to purchase the leaps, you have to make sure it says buy and call, and the most important thing is your strike date. Your strike date needs to be far out. For the purposes of this video, we're going to use the strike date of January 21st, 2022. Now, you can purchase your leaps above the share price, but that is not what I teach on this channel. On this channel, we purchase our strike prices below the current share price in order to maximize our profit. So we're going to purchase the strike price of $55, and as you can see, I already have one right here. Now for this $55 strike price, I'm going to have to pay $10.90 or $1,090. As you well know, each option contract is multiplied by 100 shares. So we're going to click into it. We're going to hit continue, and we're going to choose the amount of contract we want, which is usually one. Now, for some of the other stocks I will show you, I own more than one leap, so the contract number will change. So as you can see here, it says that I'm going to have to pay $1,090. Now, this is perfect for someone that has a very small account, meaning if you were to buy DraftKings outright right now and you need to purchase 100 shares, you would have to pay 61.01 multiplied by 100, which is about $6,000. But by utilizing this strategy, you're now able to pay much less than half of that, and I will show you a bit later how to generate revenue with the amount that you're invested. So now we have one leaps in which we paid $1,090 into our stock portfolio. What are we going to do? Well, now we're going to turn around and we're going to sell what's called covered calls, and now we're going to use the leaps option as collateral. Collateral meaning the leaps option is going to act as if we actually do own 100 shares. So we're going to go all the way back out right now, and we're going to start again. So now for the second part of this option strategy, the PMCC, we're going to go to trade DraftKings options, and then now we're going to go to sell and call, and we're going to choose our strike date much closer. Now remember, for the leaps option, you want to choose your strike date a bit further out. In order for you to sell covered calls now, it's more beneficial if you choose your strike date a lot closer to you. Now we're going to choose our strike price. Now in the previous example of purchasing the leaps, it was advisable that you choose your strike price below your current share price. The opposite is true when selling covered calls. For selling the covered calls, it's more beneficial to you to choose your strike price above the current share price. And for that, we're going to choose a strike price of $63. As you can see, I already have one right here. Now for selling this at $63, I'm going to have a chance of profitability right here of 78%. And now that I'm selling a covered call, I'm going to receive a premium. Now the premium that it shows here says 0.58 or $58. However, when I did purchase this, I was able to get $70 for this premium. Now, if you want a detailed video on how I choose my strike prices and how I'm able to get more premiums, just leave me a comment below and let me know. I'll be more than happy to make you this video. So now we're going to go ahead and select the strike price of $63. We're going to hit continue. We're going to choose the amount of contracts. Now, since I only purchased one leaps, I'm only able to sell one contract. So once I sell this contract, I'm going to receive $58 minimum credit into my buying power. Now, this money is mine to keep no matter how this trade goes. Now, let's talk gains. So you did spend $1,090, and now in your first week you're generating $58. Now in order to find your percentage gain, you're going to divide your $58 by your cost, which is going to be 1090. Now right away you're going to see your percentage gain here is going to be 5.3%. Now 5.3% is extremely high, which is very good. Now let's just get into the other stocks, and I'm not going to dwell on the other stocks as I did with this one. I went through this one in detail so you could see exactly what I'm doing. So our second stock for today is going to be Trade Desk, ticker TTD. Okay, so here we are on Trade Desk, and I'm going to show you the long call I have, or leaps. Now long call and leaps are interchangeable. It all depends on the maximum amount of time that you've chosen. So if we go down here, we're going to see the leaps I picked up is right down here. Now I did buy the $70 call that expires January 21st 2022, and in order for me to pick up that leaps, I had to pay $14.15, or $1,415. So now we have that second leap into our portfolio. Now we're going to go ahead and generate revenue. So once again, we're going to go to Trade TTD Options in order to load the option chain, and now we're going to sell covered calls. So let's make sure it goes to sell and call, and we're going to choose our strike date of September 10th. Like I said, this video is showing you how much money I make in 1 week. So all our strike dates will be September 10th. Now we're going to sell our strike price above the current share price, and as you well see, I already sold one at the $81 strike price, which gives me a chance of profitability of 80% or higher. Now it says here that I received 0.45, but I did receive 0.58 on this one. So we're going to click that, we're going to hit continue, we're going to choose one contract, and there you have it. So in addition to our $58 that we just received, now we're going to receive an additional 45. Good. So without further ado, let's jump into the next stock that I'm using to generate weekly revenue. So the next stock is going to be one of my favorites. It's going to be AMD. Okay, so here we are on AMD, and I'm going to go into Trade AMD Options once again to load the option chain. For this one, I do own two separate leaps, so I'm going to go into the actual leaps that I bought so I could show you. So once again, make sure it says buy and call, and we're going to choose a strike date. We're out. We're going to choose January 2022. Now we're going to find the leaps which I purchased, which is going to be below the current share price. Now I did say I purchased two, and here is one right here. So I do have one at the $100 strike, and I do have a second at the $95 strike, which is now going to allow me to be able to sell two contracts on AMD. So now we're going to go ahead into sell and call, and we're going to choose our strike date for our sell calls, which is going to be September 10th. So here we are, our strike date on September 10th, and I'm going to show you the calls that I chose. Now I did choose the 114 call, and I did choose the 115 call. Now I could have chosen the same strike price for both of these calls, but in order for me to minimize my risk, I decided to go with two different strike prices. Now for the two different strike prices, obviously I'm going to receive different amounts. So as you can see here, for the 114 it's going to be 1.52, and for the 115 it's going to be 0.39. Now like I said, I did receive way more premiums than what is showing right here. So I'm actually going to go into AMD so I can show you the actual premiums that I did receive. So here we are back on AMD Options, and as you can see, I did sell the 115 call and the 114 call. Now it does show here that the premium is 0.39 and the 0.52, which is not so. So we're going to jump into the 115 right now so I could prove to you that I did receive a lot more premium. That's what is showing right now. So if you jump down, you can see my average credit right here is 1.11, meaning I received $111 minimum credit. So if you want me to show you how I am able to generate much more premium than what is currently showing, just leave me a comment below. I'll be more than happy to make a video. Now we're going to jump into the next stock in which I use to generate premium. So our next stock we're going to jump into is going to be Palantir, ticker PLTR. Okay, so here we are on Palantir. Now I must first tell you, Palantir is one of the best stocks in order to do this strategy. The reason why it's one of the best stocks is because Palantir does not move much in any direction, up or down. Palantir is pretty much flat for the longest time. So we're going to go ahead to sell and call. We're going to choose a strike date once again of September 10th. Now as you can see here, I already sold two calls at the $27 strike price, and as you know, I received a lot more than $33. Now the other thing is, when I did sell these stocks, Palantir was trading at $26 and not $27, as you can see here. Now because the share price increased, my chance of profitability has been lowered. So we're going to add that to our total, and then we're going to move into our next stock, which is going to be Apple, AAPL. Okay, so here we are on the Apple leaps. Now if you guys are indeed fans of the channel, you guys would have known by now that Apple has given me very nice returns. So this is the Apple leap, and my expiration date is January 21st 2022. Apple is currently trading at $3,600. However, I did buy this at $1,520. So as you can see, my returns on Apple is very good. This is one of the main advantages of having the Leaps option. Not only are you able to generate revenue, but you also benefit from the stock appreciation as well. So we're going to go into view all Apple options. And now we're going to sell a covered call against the Leaps that we own. So once again, sell and call, and we're going to choose a strike date of September 10th. So as you can see here, I sold a call at 157.5 with an 80% chance of profitability. And for that, I received 0.75 and not 0.52. I received way more money. Now we're going to jump into our last stock, which has helped me generate $600 weekly. And that's going to be Lemonade, ticker LMND. Okay, so here we are on my Lemonade sell call. And the reason why I chose to jump into this, I'm going to show you what the average credit of what I received. The average credit I received is 1.05 or $105. Now I'll show you why I started off here in just a second. So now we're going to go into view all option once again. And I already do own one leap of Lemonade. So now we're going to go to sell and call, and we're going to choose a strike date of September 10th in keeping in line with the rest of our strike dates. Now we're going to choose our strike price above the current share price. And I already sold a call at the $81 strike price. That gave me a chance of profitability of 80%. Now, as you can see here, it's saying that I would receive 0.85 if I were to buy this right now. But as I showed you, I already received 105. So I am able to utilize my knowledge on option in order to generate much more premiums. Now, I must let you know, this strategy is not for everyone, and beginners should understand options and exit strategies before using the PMCC. Results may vary as well. Depends on how the market is trading. We also have lots more strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell to get an alert when I post a video. But most importantly, if there's anyone out there you think that can benefit from this video, feel free to share it with them. Let's help as many as we can. Thanks for watching, and remember, always keep pushing your investments.